Hey guys, this is Simon with Trade and Perform Coaching. I wanted to take a moment to cover something that I thought was and still believe is very, very, very important. And that's a piece that Dr. Brett Steenbarger did. I'm very grateful to Dr. Brett Steenbarger. His work has been invaluable, worth its weight in gold, his books, to my trading. And I want to relay what he's been talking about in this particular post that he put up today, and explain how that relates both to me, but also to all the people that you're trying to follow out there who make trading look easy. So first, I'm just going to read it straight up. You think I'm crazy for reading it, you can cut it out now. I think the article is probably one of the most valuable things that I've read. So he wrote, Saturday, August 22nd, why trading financial markets is so difficult. Yesterday was one of my better days, and I'm going to dissect this with my own interjections as we go along. He goes, yesterday was one of my better days of the year trading ES, and a large part of the success consisted of not following my process. Therein lies a tale of why so much common wisdom in trading psychology is horseshit. Oh, there you go. He doesn't mince words, right? So let's go in a little bit deeper, because first off, there's an underlying message you'll hear from every furu, aka guru. Trading markets is really easier than you think. Why is this the meta message? Because the furu needs to appeal to the quick money crowd. There is no, I want you to hear this, guys, there is no sexy message if you tell people that trading is difficult, that even the world-class traders have losing periods. Holy cow, the world-class traders, I'm always hammering Paul Tudor Jones, 1987 video that he does on 60 Minutes. On that day, this is the best trader in the world, loses 10% in a day. Okay, yet everyone out there, I can lose and I can trade with a 3-tick stop. Sure. So there's no sexy message. So then he goes back and he goes, let's start that over again. There's no sexy message if you tell people that trading is difficult, that even the world-class traders have losing periods, that it takes years to master any craft. So the furu goes after the people who don't want to work for a living. After all, what more alluring message to send them than it's really easy. All you need to do is focus on X. And it's funny because I got sent a message when I had my open house the other day, and the message was, actually, it's quite interesting. I'm going to see if I have it still here. I believe Victor is the one who sent it to me. And Victor goes on to say, because I was in the middle of explaining my whole process, and occasionally it can get a little complicated. And so then he goes, Simon, he wrote this while I was doing this. Simon, just a quick observation. I understand your style, and I like it. Here, I'm just going to move this right over and just, actually, you know what? I don't want to do it because I don't want to put his name up there and protect his privacy. But he goes, just a quick observation. I understand your style, and I like it. It has helped me calm down and wait patiently. More importantly, it has helped me to make winning trades consistently. But if you're a new person in the room, this all is a big overload of info. The zones, swings, rotations, etc. It looks like a lot on the screen. References to options is also confusing. Not sure what the answer is, but maybe doing an after the close intro session to your style and what your philosophy is may help the new people better understand what you're explaining this morning. I think most people want the holy grail, easy peasy system to make dollars, so you may lose those people as this all sounds too complicated, when in reality everything you do is spot on and helps consistently make money. Just a thought. Please let me know what you think. So here's the deal there, right? Is that even in my own methodology where I look at rotation size, I look at what the price action is within that rotation size, my key support resistance levels, and then I have a proprietary swing long and swing short indicator. Everyone looks down and they go, well, whoa, wait a minute, I have to put a little bit of work into understanding what Simon's doing. Well, yeah, that's true. You're going to have to put a little bit of work into understanding what I'm doing so that I can help you help yourself, right? The first key to any trading is, number one, stop blowing the shit out of yourself. Number two, get to break even so you can move in and out, set a set trading plan, learn how to follow the trading plan, and learn to trust using very specific methodology of using spreadsheets and trading journal so that you can trust yourself as you're going through and making trading decisions. super, 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 super important. That's all I can say, right? Now, let's go back and jump over to what Steenbarger says. Again, that's one of the issues I think I have with growing the number of people in the room is, I'm actually honest, it's not super easy. It can be done, and you can make a shitload of money trading. Don't get me wrong, but not easily. Okay, I think several people have said that day trading is the hardest easy money you'll ever make. So let's keep on. And he goes, so he's talking about the Furus, and then he goes, well, it's not easy. This is where I'm at, by the way, guys. It's not easy, and there's one major reason for why markets are so difficult to trade. They are always changing. The market you trade 2 weeks ago is not the market that traded for the past 2 days. Let's go back and talk about that for a second, because I actually caught some heat from some people. They said, Simon, on Wednesday, Thursday, and Friday, you had primarily long trades. How is that possible? Why did you do that? Well, first of all, let's cover that for a second. Let's jump over to my charts real quick. Let's get a clean chart here. Okay, so number one, what does my methodology require so that I make money? Well, that's very simple. I rely on the fact that the market does this pattern most of the time, right? Number two, where do I lose money? Where do I end up? Why do I have 2 stops back to back done for day, right? If I get hit 2 stops, 8 points maximum on ES, done, right? So let's go and look at that. Why is that? Well, if we start and it goes straight down like that, if I get buy signals here and I get a buy signal here, and for whatever reason, I'm going to get stopped back to back, right? So now let's go look. First thing I want to know is it true? Does the market hook up, right? Does the market do this the majority of the time? True or false? That's the first thing I've got to find out. If someone's going to follow me, that's the first thing that you got to find out. So let's get rid of this. And what I'd like to do is switch over here to a 15-minute chart, so I'm going to do that. Again, this is not going to be quick, guys, because I think this is so important. It's worth taking our time on. Hold on just 1 second here. Okay, let's pull the markets in. Last 2 days, straight down, as you can see, not much confusion. Let's look at the rest of the days here. All right, so prior to all the gurus knowing it's short, there's only one guy I knew it was actually short, Bama Trader, who I'm sure there's other people who got it, but he's been saying for weeks now that there's been consolidation above 2100 and that he's been consistently looking to swing short. He's pounded that message to the downside. I don't know anyone else who's been so consistent in the short side message, right? So then I just realized I have my headphones on for absolutely no reason. We're going to remove those. I have a mic here. Well, it probably does me a little bit better service there. So let's look at the other days, right? Let's look at days we made money. Well, here we get a U-turn, right? Had a great day here. As a matter of fact, I was long right at 2070. Get this huge hook up. I get a swing short indication right here. Even though I didn't get the short off, the swing was in the correct location. And I get a swing long right down here at the bottom. Pretty good, right? Can make money there. I get a swing long on Friday. Catch it, excuse me, on Thursday from here to here, from here to here, and from here to here. Caught all 3 of these. On this particular day, I caught this in real time. I had the room open, right? What am I relying on? Again, I'm relying on looking on these hooks. I have a very simple rule. From the time I take the trade, I try to scale. In this particular market, by 4 points, I try to be out of half the trade, move out the stop to break even or half break even. And why do I do that? Because I never know when it's going to turn, and I want to avoid this situation. I'm always watching my backside. I'm always pulling up my stops after I get my scales, and I always have targets above, leaving trailers to hit them if it comes. One thing you can't do as a trader, you will never ever, right? You will never ever magically know that one time we're going to do this right here, where we hook from essentially 2067 all the way up to 2093, and then the next time is each of these hooks is going to fail, and we're going to free fall at the end of the day down to 2015. If you know that, You're clairvoyant and you're a billionaire. Maybe that's Warren Buffett, right? But you don't need me or anybody else. But the fact of the matter is, I don't know anybody who called and said, this thing is going to get jacked under 2040 in the last 10 minutes of the day. I don't know anyone who called it and in advance. I certainly didn't. But I had a winning day here on this particular day, right? So here I make money. Here I make, here I get stopped. Again, if the market goes straight up, right? If the market goes straight up, most of the time I'm either not going to get a trade or I'm going to get stopped. That's just the fact. If it goes straight, I get killed. On days like this, I make money. Days like this, I make money. Notice there's a common theme here of where I make money, and I know where that is. And that's on days we get U-turns, okay? If we don't get U-turns, U-turns down, U-turns up, doesn't matter. I just need the U-turn, right? So let's continue with this thought, right? I got stopped on this day, 2 stops back to back, right? I lost 6.5 points on this day. On this day, I got paid, right? I got this hook off the bottom. I get paid. I get paid here, right? All I got to do is sidestep this. I get paid here. I get paid here. I caught this downside. Maybe as a matter of fact, I tweeted it. Not only did I have it in the room, I put it out on StockTwits in real time. But here's the deal, okay? I can already convince you, or I know from going through this, I can tell you that this, right, this and this is very predominant in all markets. I can go back as far back as you want, right? And it's occasionally punctuated with a market that goes one way all day long, or one way up or one way down. My goal is to avoid these days. So I want to point out something very, very important here. These 2 days right here have been the biggest down days that we have had in a long, long time, right? If you look at this rip, this is effectively from this swing high on Wednesday to the close on Friday. We ripped from effectively 2093 all the way down to 1970 to this evening. We were trading all the way down at 1950. That is, let's see, I'm terrible at math. I'm dyslexic and I'm ADD. Let's see, that's 1950, 2000. That's 50 points. That's 150 points. There's no place else on this chart, right? I'm going to pull this up to give you some perspective, and I'm going to go to a bigger time frame so you can see this, because I want people to be realistic about what they're looking at. There's no place else where we suffer this kind of downside in the many, many months that we have had, right? In the many, many months that we've had. Compare that, these are 30-minute charts, constant U-turns up. So what I want to say to the people out there, the people I'm trying to teach, the people who are trying to follow me and learn how to trade the market, was I followed my trade plan on this day. On this particular day, I had 3 trades that gave me an equivalent with trailers of potential 12 points worth of winners, right? On this day, I got stopped on my first trade because I got a little over aggressive and misread my own chart, right? On the second trade, I got paid. I had a 7-point trade. The majority of the scale came at 4 points. My next scale came at 6 3/4 points, right? And then I got stopped on the last little bit, break even, okay? For the day, because I got stopped on my first trade and I managed my risk, I cut my trade size in half. That put me down for the day total 1.25. Let me tell you something about my trading style. If I can survive this day minus 1.25 and I make money on this day and I get paid on all these other days here, right? Most days I'm going to get paid on this stuff, right? Then I have a methodology that I can execute over and over and over again, okay? Again, it's not easy. And why isn't it easy? Number one, requires patience. Number two, I take away some of the excitement. I don't trade in the first half hour. Number three, I take my trade whether I'm making money or losing money, and also I'm honest. If I get stopped, I get stopped, right? That's just part of the deal. But I take my trades consistently, and it becomes a little vanilla because I have the discipline to take the trade over and over again, but it's why I get paid. I want to show y'all something else here. If we go back to August 2011, it's one of my favorite periods of time. So let's go do that real quick. Go to date, August. It's going to take a second to pull the data. And then let's do this. Boom, there we are. I want to show y'all something. Notice this is in November. Look at the downside, 1160 all the way down to almost 1,000. We get a couple of days of downside, you can see that. But look at this push back up is just enormous, right? Let's go over a little bit. Let's drag this over. Okay, earlier in the year we had Armageddon. Let's see if we can find where that Armageddon is. Ah, look. We come from, it's a little bit higher. Let's see where we can find the high of the year. Oh, there it is. Look at that. We go from 1110 down to 910. And then look at the counter rally, right? This is in January. Look at the counter rally back up, right? Most of the time, there were some days where we went straight back up. But look, if a guy got used to shorting over here, getting run over here, all I want to do is survive this so I can make it over to this. If this turns out to be profitable, even greater. Awesome. I want the two-sided markets to come after the bone crushing. And I can tell you I'm most likely going to get them. I'm probably going to get them this week, right? If you push through the rest of this year, you'll see again. Look at the rally. And then what comes next? This is, again, what happens when the Fed doesn't have control of the market. Look at this downside. Everyone thinks, oh, it's all over. Well, look at the shifts back up here, guys. Okay? The downside, again, only lasting for a couple of days. If you move over, and I'm going to August 2011 because prior to this week, this is the period we had the most volatility. Look at the upside. Yeah, did we fall? Yeah, we fell. But look at the upside move. Why do you think I don't get focused on the downside, right? And I don't hype the downside. If I can catch it, that's great. But we're about to get some two-sided markets here coming up, guys. It's going to be really awesome. Look as we dig into further into the year. Look at the rally there. Now watch this downside move. Look at that. All the way back down. But then look what happens. There's your big downside, right? Everyone gets hyped over the short. Look what the market does the majority of the time after that. Sideways, two-sided trading markets, right? All the way back up, all the way down. Again, we only have the down period for a short period of time. From 623 to 77, 1 or 2 weeks of downside. And the majority of these days, if you'll notice, have two-sided market. Go look at the days, right? Okay, so I think I've hammered the point home, so I'm not going to continue up with it. Let's go back to Dr. Steenbarger's article and finish reading that off. Because remember, the reason I'm doing this series is primarily for my daughter. I want her to know how to be a master trader. I want her to know how to take money out of the market, right? So if we go back and look at what Dr. Steenbarger says and we continue, he goes on to say, and we're picking up right here. He goes, well, and me, I want you to understand this too, okay? Because again, this whole series is done for my daughter. In case you're new to watching this entire series where I'm looking at mentors, and then I'm putting my own trading experience on video. So if for some reason one day I'm not here to help my daughter for whatever reason, right? She can always refer to these videos that I'm storing digitally, and she can get the lessons from them to hopefully become a great trader herself. So let's quantify this, right? So he goes on to say, well, this is Dr. Steenbarger. It's not easy. And there's one major reason for why markets are so difficult to trade. They are always changing. The market you traded 2 weeks ago is not the market that traded for the past 2 days, right? He goes on to say, above, and I just demonstrated that, right? Go back to August 2011, massive downside. But I do know this, markets do go 2 ways. They don't just go down, they don't just go up, okay? Above this is a chart where each data point represents 50,000 ES contracts. It covers a period from 7/1/15 to the present. Note how the rules that would have made you money very early in the period are different from the ones that succeeded in the middle of the period and extremely different from what has succeeded most recently. I built quantitative models of the ES market. The backtests for those short-term models have gone back to 2014, as this has been a relatively stable, stationary regime. A stable set of rules has been predictive of forward price movement. As we went from trading Thursday to Friday, it became clear that the models, which generally put you long and oversold higher volatility environments and short and overbought lower volatility periods, were not working. They were not working because the price action in the market was not typical of the price action from which the models had been derived. Only the October 2014 period was similar, but even there, important differences were present. I want to note something between Dr. Steenbarger and myself. My model actually worked over Thursday and Friday, and I'm going to give one key reason why it did work. While I didn't get a short trade, I repeatedly had proper entry with the exception of one time, which was my loss on Friday morning. I don't think I entered that trade, but that was only in retrospect that I saw that. The point being that if I do get into a market that I can't trade correctly based on my trading rules, my stops are what covers me. So I view my stops, my entries, my exits, and how I execute is all one package, right? He's talking about a little bit different about his model actually changing to get him to the short side. My model won't get me short until I get a counter rally back up and I can get proper location. That's what works for me. I have a time-tested methodology that isn't perfect, but it works extremely well for me. And Dr. Steenbarger is talking about what works well for him. But one of the keys about the market is that you have to find a methodology that fits both your psychology, your financial means, and your emotional ability to adapt to the market. It's the only way I have to put it. So then he goes, parenthetically, that's a hard word for a dyslexic person to say. Parenthetically, we closed Friday with fewer than 5% of SPX shares trading above their 3 and 5 day moving averages. He's talking about the shares within the index itself. And fewer than 10% trading above their 10-day moving average, with the VIX having soared to 28. That price action is much more similar to 2010 and 2011 conditions, which I just showed, by the way, than 2014 through 2015 ones. Now notice, Dr. Steenbarger looks at the market very differently than I do, but we both have a way of taking that. We take a certain amount of information and we funnel it down in ways that we understand what the market's doing, and we can interpret it in a way where we can get in and get out and manage our risk. We probably trade very, very differently. I don't know Dr. Steenbarger. I don't know how he actually trades. All I can do is interpret from his books, which I've read them all, and from what he writes here in his blog. However, the point being, he has a process, and he has a process through which he filters and views the market. And it's not one that involves running around half-cocked, trying to figure out what will work for me today. He already knows what he's going to do going into it. He knows his methodology so well that he knows when it's broken and not working as well. That comes with knowing yourself and knowing your trading rules, okay? So he goes on to say, so I disregarded the model output and instead turned to my research that identifies when we have a likely trend day. The persistent hitting of bids on expanded volume was indeed present and led to a good afternoon short trade. If anything, the models would have had me hunting for bottoms. So you notice how he said that? He goes, the persistent hitting of bids on expanded volume was indeed present and led to a good afternoon short trade. But then he goes back to talking about his model. He says, if anything, the models would have had me hunting for bottoms. Now, I saw something totally different. In the room, I said, hey, the dome, which is the dome that the market trades on up and down, I said, hey, it's incredibly thin to the guys in my room. I said, and I posted, I said, if we close, if the 5-minute bar closes about 67 or 1966, that would be a trap to the upside. But I'm not going to take it. The market's too thin relative to my trading. It's the end of the day, and we're getting pounded on the downside. I'm going to skip. So kind of in the same way he adjusted his trading to kind of the way he adjusted his trading, I adjust my trading, right? And I knew that I'd gotten lucky to only be down 1 1/4 point, considering I didn't execute my first trade very well on the day. So he goes on to say, let's see, but I built quantitative models in the U.S. market. Okay, so then he goes on to say, I did not follow my process because I have a meta process for adopting my process. In other words, I am constantly scanning to see if this time really is different so that I can adapt to changing conditions as quickly as possible. I don't want to be trading mean revision, which worked well through much of the period of the chart above, when we are now in a trend/momentum environment. Okay, now, I got to tell you, my methodology works in this environment. His doesn't. But he's correct. If the market, as I drew earlier, goes straight down, I get in trouble. I have to rely on my 2 stops. Now, he's a little bit different. Maybe he has better control of his emotions. I don't want that constant. It kind of gives me an uneasiness to switch off of my trading structure that I have. And I don't have one that says when we're down more than 25 or 30 points in the day, even on a trend day, to jump to the short side, right? It just doesn't work for me psychologically. I've been trading the markets for a long, long time. But it works for Dr. Steenbarger, and it's all right. And the reason why is he has a structure which he can follow mentally to do it. I know that I would just simply be too anxious shorting when we're already 25 in the hole because I've been trading for a long time, and I know that this won't last. It's not important to me to capture this downside. What's important to me is what's going to come over the next couple of weeks, which is going to be a bunch of two-sided trading. Hopefully, I'm correct on that, but that's what I'm looking for, right? And I'm looking for range expansion and not one-way trading. I'm going to push my shorts further than I have been over the past year. That is a change I'm making, right? And I'll also expect my longs, because bear market rallies are beasts, to do very well. Again, because I'm going to adapt. I'm going to take my structure, I guess, somewhat similar to what Steenbarger's doing, and I'm going to take it. But what I was doing before was I was very quick to cover my shorts because, well, the market was just getting hung up on the upside, right? It was hard to push down. I will start pushing my shorts very hard, but I will wait till I get my trade location. So I want to continue going here. And then he goes, this is why trading is so difficult. In most performance fields, we can count on stability. The pitching mound does not go from 90 feet from the plate to 60, then 120. The basketball hoop does not go from 10 feet high to 12, then 8.5. The rules of chess are constant throughout tournaments. The rules of markets can change over the course of a week. Success can come from faithfully following your trading process. Ongoing success comes from quickly recognizing when that process needs to adapt. Now, I want to say that one more time. Success can come from faithfully following your trading process. Ongoing success comes from quickly recognizing when that process needs to adapt. Now, I'll tell you right now, I have plenty of evidence to think that the market will go back to a two-sided market. As a matter of fact, if you look this evening, right now it's 7:10 Central Time, and earlier tonight, as evidenced, I want to pull up this chart and I want to pull up my own blog, right, as to why I believe my methodology will continue to work in this environment. I'm going to go to 24-hour chart here. We're waiting on data. I'm sure it'll come up in a second. And I want to show what I tweeted here. So let me... I do not know why we cannot get a 5-minute chart up here, but I'm certainly hoping TradeStation figured out why we had a little bit of a problem there. So let's go and focus in on this area this evening. And let's see if we can't. There we go. And I have no idea what I did with my own photo down here. But again, no one needs to see me here, I guess, at the end of the evening. So a couple of things. First of all, this evening, let's get background dragging. And I posted right out of the gate, this is a chart that I posted to my clients. And if you can see this, I don't know if you can, but it shows the first support zone, 1958 to 1956, right? And you can see right when we opened, this was 1958 to 1956. Okay, so these are the zones that I put up, and the plan from the zones is when it's just a zone trade, which we're in, right, is to take your 2 points, once you get it, move your stop either to net break even or break even, and hope for the best. It's a total and pure scalp. Usually I'm scaling 3/4 at 2 points, right? You can see if you entered here at 1958 that you were able to get your scale off, even in a worst case scenario where we pulled it in here, close to 1960 at 1961, easily getting your 2 points, right? So that's one methodology that I have, the support resistance zones. Then I came over and I tweeted. Again, this is for my homework, right? So let's go back over to that. Pull that over here, and in real time. I love stock tweets because they timestamp it, right? So at 5:20 p.m. I put below here I have 1948 1/4 to 1950 1/4, followed by 1939 1/4 to 1941 1/4. So if we go on and look, here's 1950 1/4. That's 1950 1/4. The low of this evening is 1950.50. Again, it's not a matter of whether I got it or didn't get it. It's a matter of I knew exactly on the chart where I wanted to look. We come to 1950.50 1/4, and here's why. Let's play pretend for a second, shall we? And in pretend land, right? In pretend land, there I am. I said I pop back up on the video. Pretend land, I get the trade right here. Okay, so let's play pretend for a second. I get my 2-point scale. Again, it's a zone. Again, we're down we're down approximately 20 points in the hole. What did I say earlier in the video? I am loath to short when we're down more than 25 points in a day. It's just generally a bad idea for me. But the point being, let's pretend I had it at 1950-50. Okay. First of all, I know that I'll get another trade. Not a big deal. And let's pretend this was real time since I don't trade the Asian markets, right? So we get it here. You get your 2-point scale. That picks you out approximately right here at 1952.50, right? Now look at your trailer from 1950 and a quarter all the way up to 1960. Also, notice how I'm able to plan for my trade. Okay, I posted this tweet because it's timestamped, right? And if you can see here, get rid of this. I'm going to post right here, 5:20 p.m. That is 5:20 Central Time, and that was right here. This is when I post at 1950-50. The point behind that is because I followed my methodology, because I knew where I wanted to take my next trading opportunity, right? This is my scalping methodology. I also have a swing methodology, but both of them center around the fact that I don't want to short when we're minus 25, and it also centers around the fact that I have a written trade plan, I follow it. I'm trying to do exactly what Dr. Steenbarger talks about. I adapt the plan. I have multiple approaches to the market, right? It's not easy to present, right? You can't be a guru because you can't go, hey, it's just this easy, it's always this way, right? It's very difficult, right? But I have a proven methodology, not proven to you. I'm not trying to prove it to you. I'm trying to share it with you, but I have it proven to myself, and that allows me to stay within myself, not become scared. I know that if I get stopped 2 times back to back, I'm going to stop trading, and I'm going to be able to protect my account. And I know that my methodology works when does it work? When the market does this and this. And I know when it does this, that I may or may not make money, but I know that I won't wipe out my account on these days. This is my Achilles heel, right? This is where I have the most at risk, this and this. These are the 2 places I have the most risk, where it just drives straight up and it drives straight down. And I do a pretty good job of avoiding those, but if I get caught, then I'm usually able to survive those. Actually, I'm not even usually able to survive. I'm always able to survive those situations. So, my name is Simon. I'm very grateful to you, Dr. Steenbarger. Your work is amazing. I wanted to translate what he wrote here as to how it translates into my own trading and how I have a little bit different perspective than Dr. Steenbarger has. I would have never switched to shorting even if I thought it was a short late in the day, because it just emotionally sets me up to wanting to become addicted to that short late in the day. And even in the worst of markets, that is a very difficult trade to pull off consistently. No criticism of him whatsoever. I'm glad to anyone who was short the last 2 days. Congratulations, Mazel Tov. I'm very happy for you. It's great you made money. Just didn't work for me. But even within that structure, I was able to make money. And on the day where things didn't go perfectly right, had very minimal losses. And I'm very, very happy about that. So the last piece is anyone who'd like to join us in the room for a free 5-day trial is welcome to do so. I tried to price the room so that it's both effective for me in helping others out and affordable to I mean, it's less than 2 ES points. It's $95 a month. Either way, I'm not here well, I am here to promote it, but I'm not, my mission isn't to promote it or to make the room work. This is my version of giving back for the success that I've experienced in the trading world and helping others come along and move from being frustrated to boom bust to getting consistent. And I've done that successfully with several traders, and it feels fantastic. So anyways, it's given my life a whole new meaning in terms of my professional life. So hope everyone has a wonderful day. You've had a great weekend. Dr. Brett Steenbarger, the trader feed, I can't recommend it enough. And I would love any feedback that y'all would like to give. Whether it's good feedback, terrible feedback, or I'm an idiot or I'm a genius, I love to hear it all. Everyone have a wonderful night, and the people who have left feedback, thank you so much. I appreciate it. We will talk to you all soon. Of course, I'm going to go read this next article here next, which says trading coaches is whores. Hopefully I don't fall into that category. Anyways, guys, have a wonderful night. We'll talk to you soon.